All right, happy Friday, everybody. It is March 4th, 2022. March 4th. And I think that's what we're going to do here. Is march on forward here. Ha ha ha. Um, let's take a look at what happened here yesterday. Actually, some pretty cool stuff. Let's see, where could I do? I want to jump up to the 60-minute real quick and just show you that our little expected area of resistance up here, 15, to remember that swing low I put the dotted line across at 22.75. That's the exact level we ended up holding. And we went ahead and sold off and was a little bit messy there going in. But I just wanted to point out that we came up and remember we had 43.98 to 4400. We had 44.15 to 44.22. And then the next level above that is going to be up into 44, 45.50. It's been a nice little stair step one by one here, and we're getting the failure now. Um, so let's take a look. Let's go down to our shorter time frames. I just want to see if there's anything interesting to note about yesterday, and then we'll just start getting into this morning. Um, so look, oh, that's right. Yeah, so we ended up highlighting the major areas that we expected to hold for potential bounces as the market sold off out of the open yesterday. A few of those areas were 43.98 to 4400. Remember that number was our resistance level for a little bit of time there. That's the exact trade we took just after the open there, right out of that zone. Ended up working. We pulled back right into our next expected support here at VWAP off the previous resistance. Got a nice 10, 15 point bounce off that. And then came down right into our next expected support, but as you can see, not much of a reaction. Still enough time for you to get in and then close it as it started turning and coming back. And then as you can see, we came right into our orange line, tried to bounce, not much of a reaction, ended up holding the back end of it and continued to sell off, came right into our next expected support, tried bouncing 3 times. Not much of a reaction. Again, it was just about 5 or 6 or 7 points, but not much. And then came down right into the next expected support, had some trouble around there. And then finally, the low of the day was that little section I told you right between the eye level at 43.50 and our 50% of the previous day level. So pretty much right in between those two levels is where the market bounced, and that was the low of the day. And then as you can see, as the end of the day went on, we tried to come up, retrace the leg. Looks like we actually got a little failure right around that 70%, 61.8 area. Could not get up, and there was a nice double top there for anyone who's familiar with that pattern, and continued to fail from there. And interestingly enough, came right back into our zone here between 43.50 and the 50% of the previous day, which I believe was magenta there for a few, is now our previous daily low for this morning. So we came up in the overnight session, and it looks like the market is continuing to sell off here. And if you just kind of zoom out, almost looks like you have this. I mean, we're on a tick chart, so I'm going to have to go out to a higher time frame. But kind of looks like we're starting to wedge down here. So that's where we are this morning. As you can see, we're right around 50% of the overnight range here and continuing to trend lower. So let's see what our higher time frames are saying coming into the weekend. I do want to look at that weekly chart real quick because we have the weekly is going to close here at the end of the day. So let's take a look. Quarterly hasn't changed. Monthly really hasn't changed. So let's go in and let's just see what the weekly looks like here coming in to the end of the week. And let's see. So we had the attempt to break out from that previous candle, which looked like a potential bullish reversal. But as you can see, we're really selling off here, and we could come down and end up closing down around 50% of the previous week. Not looking too strong at the moment. Of course, anything's possible, guys. So this market could start ripping this morning, and we could be retracing this sell-off from the all-time high. Anything's possible, but right now it looks pretty bearish. Let's look at the daily here. our daily, remember, for the last day or two, we said we might start to build up a potential bearish divergence off these highs. Yesterday, when the market closed, there we go. Beautiful bearish divergence off the high. So we were expecting that could be a potential situation, and we even said that our expected resistance here, looking up at the daily, is just about that swing low that I talked about at 2275. Came up, remember, right between 15 and 2275 there and failed. So we've got a beautiful bearish divergence that we did anticipate. And now, as you can see, we've retraced this leg now. So from that 4101.75 up into, what was the high? What was the actual level? 1875. So right between 15 and 22. So right up to 1875. And as you can see, where are we pulling back to right now? Just into that 38 to 50% retrace area. One other thing to note for anyone who was in the study session yesterday, I think it was really valuable content. In fact, I even kind of forget about some of this stuff, right? I start focusing in on looking for divergence, looking for levels, and I forget to step back and just look at what the ranges are telling me on RVI. And this morning is a beautiful example. If anyone was here, yesterday for the study session, look at where we're having trouble here, right around 50. I mean, ideally, I guess we'd like to see it coming up right to the back end of 60 there, but still being right at the 50 line there, pretty bearish indication that the RVI can't get through there, and we have a bearish divergence right now, right? So still more bearish clues here on the daily. So let's go down into our intraday time frames now and see what's going on here. We do have, and this has kind of been, sometimes we see this for 2, 3, 4 days in a row. It'll be like a similar pattern every single morning. This morning is the same thing. We've got a nice clear bearish divergence from the previous high, which was, again, a higher high for the last maybe week of price action. We've made that higher high, but RVI is lower. In this case, and guys, remember back to our study session yesterday, look at what's happening here on the 4-hour chart. We can't get through the 60, and we have a double top, a bearish divergence off the high. And if you look here, this pushed much lower on RVI, even though we pushed up to the high of the day. So we've got all this bearishness right at the 60. What is that telling us based on what I taught you guys yesterday? Looks like we're probably continuing to stay in this bearish market. Of course, anything's possible. If we get some strength and the market starts to rise, we could end up breaking through 60, but right now, that's the conditions we have in the market. So it looks pretty bearish from here. And like I said, just similar to yesterday, we have the bearish signal off the high, but on the pullback, the overnight low has an argument for the bulls. So what does that mean? If you were here for the last week, you should know what I'm going to say. If we can stay above the low of the overnight session, let me just make sure the 60 also has it. Yeah, we've got a 4-hour and a 60-minute bullish divergence. Those are significant time frame signals. So if we stay above the overnight low, then there's an argument that maybe the bulls will take this at least to come up and test the high from yesterday. That's one scenario here this morning. That's one little thing you want to pay attention to. The overnight low is 42.8350 there. On the flip side, with all of the bearish signals off of the previous daily high, again, from the daily, now we have stronger signals because we have the daily involved. We've got the daily, the 4-hour, and the 60-minute, and a bunch of other time frames showing. I've got to go forward there, showing the bearish divergence. So that means that if we can't get through the highs from yesterday, then we're expecting a continuation to the downside. The other scenario here, and there's probably a million different scenarios, but the three basic scenarios here is if we hold the low, then the expectation is to come up at least test the high, if not push higher. The other expectation, which I think has a little bit more weight because we have a daily signal backing it up, is the bearish divergence from the high of yesterday. That should spell a continuation to the downside. The third basic scenario here is we just chop around all day. So we don't ever really break the lows. We don't really ever break the highs of yesterday. So that's what I'm seeing here. This 4-hour has a very bearish pattern right now Of course, the counter signal is there off the pullback. So we'll see who wins out. Looks to me like maybe the bulls will win out here, but remember, guys, we really can't predict the future. All we can say is there's a little bit more weight on the bearish side. And now let's go to our 60-minute and start looking at some levels here this morning. I had to redraw our fib. So remember, for the last few days, and I hate when I pull that all the way across. I can't get it. The last few days we've been looking at just this leg right here. So from the double bottom at 0175 or whatever that was there, yeah, 0175, up to these highs we made back, I think on Monday or something. That was the fib scheme we were watching, and we highlighted kind of the 38 over here. We were looking down at the 50 here, right around 42.50, which is a good level, regardless of whether or not the fib moves now, that 42.50 area. And then our 61.8 was sitting here right at that 42.13 area. And you can see the shaded regions, some of them are pretty small here, but those were all there up until today. What I would say is, because we did push higher and get to a new high, technically we really need to redraw this fib, because now we have a larger piece of the leg here if we want to encompass the whole thing. So when we do that, we shift our retracement levels to some other areas in the chart. So let's take a look here. Notice that in the overnight session we came right up to 61.25 and failed with a bearish divergence. So got a failure there. We're holding below 50% of the previous day. We're down below the orange line. We're below the previous daily low. Everything is pointing to lower right now, like I said. So if we pull back here, getting through the overnight low would be that first task for the bears. And remember, there's always a possibility the market comes down and kind of peaks through it, but then comes right back up. So that's one scenario. But what I'm talking about is an actual break through this level to come down further. So what are we looking at below us here? If we get through 83.50, I hope that 42.62 area is peeking out to you. Not only is it a good eye level, it's 50% of this push out from the lows. And there's also, I think, a few other things sitting there. That's also the bottom of one of our our structure zones. If you remember back to those areas we highlighted, can't really see the boxes in here. I think I drew them really far out. But this is that dividing line between the top end of the chop or the structure zone and then the bottom structure zone. So that is going to be important here if the market pulls back into there. So watch that this morning. I'll go ahead and I'm going to highlight this and copy it over into my short time frame chart. So let me get this on here, at least out until the close. So I got that on there. We can't ignore 42.50. Remember, there was a whole bunch of stuff around 42.50 there, so we can't ignore it. And it just is what it is. We've got 42.60, and then we have a little patch around 42.50. So basically almost every 10 points here, we might have some type of reaction. So we've got a 60, we've got a 50, and then we've got that 42.40 eye level. It just is what it is. Every 10 points there's an area that makes sense for a potential turn. A little bit deeper than that, we're going to get down into this 61.8 area. And to be honest, we see the market come into a retracement level, even if it's not really lining up with anything that I visually see, and it'll hit it literally like to the tick and go. So we don't want to ignore that. And we actually have a minor eye level right there at the exact level, 22.50. Okay, so that minor eye level, I'm going to go ahead and highlight this just a little tiny bit. That minor eye level right there at 22.50 is exactly the 61.8. So that might also be a potential level there at 42.22. And then another 10 points lower brings us right into that 42.13 level that we've been talking about for a while, up into the swing high there at 42.1675. So these are, I know there's a lot stacked down here, and the idea is we don't necessarily want to be blindly buying these because of expected support. remember, we have a bearish case this morning. So we want to be short. We're just looking for areas for targets to the downside. Each of these levels is a potential level that could bounce. So that's why I argue we want to take profit just in front of these levels as the market kind of encroaches into them. Um, so we've got that, and then it's basically almost the same thing because remember, for the last 3, 4, maybe 5 days, we haven't come back down into this region. So all the levels we've been talking about for 4 or 5 days are basically the same. So once we get down through 13, we've got that major swing high I told you about right around the high was 97 and our eye level's at 89. So right in there. And then a little bit further down, we're right into this little pocket here, basically 51, I believe, to 61. So right in there. And again, it just is what it is. There's a whole bunch of little areas that make sense for potential bounces. We want to be aware of them this morning. So those are them. On the flip side of things, if we do get a nice bullish push out of here, we got to consider what's above us. So let's take a look here. If the market holds the overnight low, or even if it pulls back and does go into one of these zones down here and bounces out and gets through that 61 quarter high, basically the overnight high. Arguably, I mean, the actual overnight high is here, just 10 points above it right there. So whatever, getting through 61 and through the actual overnight high and through 50, well, I think, let me start over here. Let me start over. Getting through 50% of the previous day, that magenta line, will be, I guess, the starting of a clue that maybe we're going to get this correction back up or retracement back up to the high of yesterday. Anything below 50% of the previous day, I'm still going to be thinking more like a bear. So if we can get up through 50% of the previous day, what do we have? Well, we've got 98 to 4,400. That level has been a continual failure point for quite a while, going all the way back 2 weeks ago and then multiple times this week. So you never know if that could hold. And then we have this little general area here where we failed from. So the same highlighted zone, 15 to 22, you never know. They could come up, make a double top and fail. So we've got that right there. And then what did I tell you above that? We have that 44, 45, 50, and then 44, 70, 450, another 30 points up. I don't know if it really makes sense to continue to look at what we have above us because the expectation here is really for that major failure. But let me just take a look here at the larger retracement just to see. I'm just curious. Yeah, so we're just in between. We're failing here off that 1875 high from yesterday, just around 38 to 50% of the whole sell-off from the all-time high. So not necessarily right off a nice level, a retracement level to the tick or anything. Just seeing where we're at. 50% of the whole sell-off is that 44.55 area. Okay, so let's go back there. 44.55. Interesting. So somewhere right around that 45 to 74 area, right in between basically is where that 50% retrace is. Something to kind of be aware of, and actually just put a 55 level in. But I don't really expect us pushing up there today. But anything's possible, so I'm going to just keep that on there as 50, just as a visual cue if we do end up getting up there to remind myself, oh yeah, we're going to go right up into that 50% fib level. That's basically it. We can look at extensions. So the whole leg from 0175 to our high at 1875 from last night, 27% is going to bring us all the way up to about 4,500 just after that 44.96 eye level. So that would be if we did start ripping and for some reason the bulls just, who knows, the war ends in Ukraine or something and it just starts ripping higher. That 27 extension would be a pretty good larger target. And that is, I mean, we're talking 4,500 here. We're at 43. I mean, we're talking almost a 200 point push. So if you can't make money on a 200-point push, you're probably doing something wrong. Um, I think that covers everything for this morning. Like I said, there's a little bit more weight for the bearish side this morning, and the fact that we're below 50% of the previous day, below the previous daily low, and below our orange line are all clues for the bears. Um, Again, anything's possible, so we've got our levels above us in case the bulls really start to rip. With that being said, I think that's basically it for this pre-market this morning. Um, and we're going to jump over to our member section here to see what we can do here coming into the open. So have a great weekend, everybody. We'll be back here bright and early on Monday morning.